Hi, Wes. It is very good to see you and happy Financial Literacy Month. We're doing a couple of videos about it. And today we are covering a very important topic, the difference between a traditional and a Roth IRA. There are so many options when it comes to creating retirement accounts, and I know that you encourage tax diversification. So let's just start by breaking down the difference between a traditional and a Roth IRA.
Quite simply, Aaron, the differences are is that when you have a traditional IRA, you make contributions with pre-tax money. With a Roth IRA, you make contributions with after-tax money. So which one to choose? Well, it just depends on where you think you're going to be. Are you going to be in a higher tax bracket in retirement or the same? In that case, the Roth is more favorable. Or will you be in a lower tax bracket? And the idea is that you contribute pre-tax dollars to the traditional IRA so that you're withdrawing in a lower tax bracket, even though it's taxed at ordinary income rates.
Mm-hmm. And I know there's a lot to consider with that, but it seems so painful. Why would I want to pay all my taxes now?
It's a different mindset, right? We've had
Right.
ingrained in us our entire lives, defer, defer, defer.
Yeah.
Well, we have to think about where tax rates might be headed. And if we think from the mindset of a farmer, I recall my dad telling me this story. If a farmer goes to a seed store and the cashier says, hey, I can give you the seed tax free, or you can pay taxes on the harvest. Which one do you want to do? Well, the reality is that if we're contributing to traditional 401ks and IRAs, what
Mm-hmm.
we're saying is that we want the IRS to be a greater partner in our retirement. So in that case, you would take the seed tax free, but then have a huge tax on your harvest, at least potentially.
Right. And I think the other thing to consider is that, Wes, as you know, we are in a historically low
Yes.
tax rate right now. And then when we take a look at the US debt, which just gives me
Oh,
anxiety, $30
me
trillion,
too.
we know the government has to come up with that money somewhere. Either they're going to reduce spending or increase taxes, right?
That's right. That's right. And we're, as you mentioned, Aaron, in a historically low tax bracket right now. We know that tax rates are destined to go up after January 1, 2026. That's when the so-called Trump tax cuts expire. But
Hmm.
even beyond that, we look back at history and see the tax rates of the past. And believe it or not, they used to be the highest federal tax bracket in history was 94%. That was back in the 60s.
Wow.
Now,
Yeah.
that's not going to affect a whole lot of people if we go back to that. But the point being is there's historical precedents for tax rates to be much, much higher.
Right. And again, just because this is Financial Literacy Month, you've touched on it already, how this is different from a 401k, because I think most people are familiar with a 401k. So is there anything else that I need to know about the differences between the traditional and Roth and 401k?
Well, if you're like many other folks, the ones that learn about the Roth 401k or Roth IRA earlier, the happier that they are, because I've never met
It's true.
someone who says, I regret putting money in this tax exempt account like a
Right.
Roth or a Roth 401k. So take action early as soon as you can.
Talk about, Wes, what I wish I had known when I was 20 years old in my first job. You are so right. If
Absolutely. You're not
somebody
alone there.
Yeah, if somebody has some questions about, what's right for them, because I know that this is a bit of an equation to figure out what's the best way to reach you?
Sure. You're, Feel free to shoot us a quick email to info@patriotwealthnc.com. You can always visit us online as well at our website, or give us a shout, 919-322-4113.
Very easy. All right. Wes, thank you.
Thank you, Aaron. Bye-bye.